Hi everyone. Good morning. It looks like we've got most people into the Zoom room now. So a good morning from me and welcome to this Accentuate by K3 Hub session. My name is Marie Wadeson. For those that don't know me, I am a managing director here at Quantuma. And on behalf of our parent company, the K3 Capital Group, I am responsible for the K3 Hub, which is running today's session. K3 Hub is a member network for professional advisors developed by us here at Quantuma and other companies within the K3 Capital Group. Since we launched last year, we are delighted to have been joined by 2,000 or so like-minded members from right the way across the country who have joined our network. Through the K3 Hub, you can access a range of CPD and training sessions, technical update webinars, and masterclasses similar to today's session, and referral fees for certain types of work referred into the group. As is always the case with this Accentuate by K3 Hub, it's a session of two parts. So the first part of the session will be running a couple of market update and technical updates for you from colleagues around the group. And the second part of the session will be delighted to welcome back Shane Lukas, who is a regular speaker who's running an unstructured CPD session for us this morning. Before I get underway properly, a couple of pieces of housekeeping for you. Q&A is open, so do feel free to ask questions as we go along. I'll look to cover off those questions as we go with each of our speakers. So I think we've got Burke who's going to speak first. I'll cover questions for him at the end of his session. Nigel, I'll cover questions for him at the end of his session. And then I think Shane will probably cover his questions as we go along. I'm often asked this, so I will just cover it off. Today's session is being recorded and will be uploaded onto the K3 Hub website next week, should you wish to go back and reflect on anything next week. So without further ado, I am very pleased to be able to welcome our first speaker, Burke. Brian is new to K3 Hub, has been a colleague of mine for a long time here at Quantuma. He's a managing director in our Restructuring and Insolvency team. Has been advising directors and stakeholders of mid-market businesses for over 20 years. In more recent times, Brian has led some very major rescue mandates in the retail and food and beverage sectors for a series of household brands. So Brian, thank you very much for joining us, and over to you. I think you're on mute, Brian.
Always a good way to start, nice and quietly. Well, thank you all for coming. Good morning. As Marie said, my name's Burke. What I'm going to be doing today is just covering off a few areas by way of market update, what we're seeing in the industry, what we're beginning to experience. So I'll be looking to talk about the lockdown measures as we move out of COVID. The business climate in general, the key stakeholders and how we're seeing they're acting and reacting to the market, and also what we see as being the future outlook, certainly in the short to medium term. What I'll do now is I'll start with the lockdown measures. So as you're all far too familiar with, obviously COVID brought with it a number of changes and a number of measures that were put in place by the government. This was across the entire scope of, I suppose, the impact on business, but also in particular, what it also did was it brought in new restructuring measures and also temporary measures, which were designed to protect businesses. During the COVID period, we saw the introduction of the Corporate Insolvency and Governance Act, known as SEGA to ourselves. This brought in things like the restructuring plan, which is a court-based process designed to protect companies, and also the monitorship of companies, whereby, with creditor consent, you could actually monitor the ongoing trade of the business whilst putting in place a restructure. Now, within the terms of the Act, there are also a number of temporary measures. These have been, I suppose, unravelled to some degree as COVID has unravelled. So most of them have now expired in June and September of last year. But of course, as we moved into 2022, lockdowns obviously effectively ceased. The final elements in relation to those temporary measures related to COVID debts for landlords and winding up petitions. Now, winding up petitions had been effectively stayed for any COVID debt. The threshold had been increased to £10,000. And the reality was that winding up became almost effectively something that wasn't happening for the last 2 years. Now, that particular restriction ended on the 31st of March. Creditors are now free to pursue debts which are owed, certainly post-COVID debts. Obviously, we're some months on from that. And also the threshold reduced back down to £750. We haven't seen a huge increase at this particular point, but with the fact that this capability is now there, we're anticipating that there will be more winding up petitions as the court system moves back to pre-pandemic times. The government's also introduced in legislation in relation to the commercial rent sector. This new, let's call it arbitration, is now available and will run up till September and then be reviewed. Obviously, it's only going to be dealing with debts that have arisen during the COVID times, and it's interesting to see how this will actually play out. Expectation at the moment is that many landlords have already come to accommodations with their clients, and to some degree, one would like to think there will not be a significant amount of people who are actually utilising this service, although there will be some. Ultimately, from a restructuring perspective, we've now effectively come out of all the protections, or the vast majority of the protections that would have been put in place for a short term. And we're moving into, I suppose, effectively what is now the new normal. All of these things will, to some degree, come back on stream. And in doing so, it will change the climate probably for most businesses going forward. If we can move on. I guess that takes us to some degree to what we see the business climate as being at the moment. And the one word that I think we are probably seeing most coming to the fore is it's challenging. Most businesses have, to some degree, survived COVID, admittedly propped up by the government measures, taking advantage of the benefits that were therefore provided by the coronavirus job retention scheme, by a series of grants, by bounce back and CBILS loans. COVID effectively, the measures ended at the start of the year. There is still, I suppose, an adjustment which has been going on over the course of time. But of course, what we're now seeing is increasing issues which are now having to be dealt with. So, we've seen increases in interest rates. Yes, interest rates are still significantly below where they were historically. But increases are increases nonetheless, and they're having to be absorbed. At the start of the year, there were certainly significant supply chain issues. They continue to be ongoing. Now, some of this obviously was created by the fact of product being produced around the world. We are a global society and a global operator. And where other countries were still applying COVID restrictions, this was having issues. But also in terms of logistics, where effectively the supply chains hadn't been up and running and operational fully for some time. That's caused huge issues in terms of getting products from certainly the Far East and other areas. We've now seen, obviously, some exceptional volatility in the energy sector. In utility prices, energy prices increasing, oil and gas prices, transportation costs have gone up as a result. We've had increases in the national minimum wage and national insurance increases. On top of that, that's rolled through into rising inflation, which some are saying will go north of 10% as we go towards the end of the year. That has a knock-on impact on the cost of goods being purchased, and of course on consumer confidence. I think last month's retail figures suggest that the retail market had gone down by 3.3%. In doing so, obviously that also disguises the fact that there's somewhere between 8 and 9% of inflationary pressure in there as well. Now, all of these areas, including I suppose the traditional elements of are businesses buying at the same level, are they doing what they're doing? These are starting to feed through, and we're starting to see them creating pinch points. And businesses are looking quite actively at their model, and also their customers' behaviours, etc. This, I suppose, is adding significantly to the fact that a lot of businesses, in the background to the COVID period have actually increased debt burdens. So overall, we are seeing a tightening and some significant constraints. The bounce back that was anticipated post-COVID has not quite materialized. And these new elements are beginning to come to the fore piece by piece, bit by bit, as they actually feed through into businesses themselves. In terms of the key stakeholders, we've summarised there, lenders, HMRC, trade suppliers and landlords. I'll also probably add to that investors. Now, lenders from our experience are being highly supportive of their clients and they're working with them. They seem to accept and recognise the fact that these businesses are recovering from what has been an exceptional period of time. We're beginning to notice that the key is becoming the question in terms of credit appetites, both in terms of whether it's new clients or additional lending. That will become quite crucial, I think, over the coming months. There is a disconnect with some clients. I think there is and this may well be client-led, where the client is not necessarily recognising the impacts that are going on within their business at an early enough stage. That's going to create some degree of shock within that business over a course of time. But generally speaking, we are finding that lenders are being highly supportive. In terms of HMRC, I think it's fair to say our experience is that they haven't returned to their pre-pandemic approach. There is still a supportive and proportionate approach being applied by HMRC, maybe some as a result of their resource levels. But we're not looking at HMRC as being the aggressive party that maybe they were some 3-4 years ago. There are deferment schemes, there are abilities for people to spread their VAT. There was an overhang from pre-COVID for 12 months. We've noticed that those that are having issues with paying their HMRC liabilities are generally being given some degree of time to pay arrangements. And some of these are quite extensive. I mean, we've just had one where HMRC have agreed to a 4-year time to pay, which seems almost ridiculous compared to where we were some 3 years ago. The issues that I guess are still arising is the fact of getting to a point where it's taking a long period of time to put these measures in place or to get them agreed for the company. In that period, obviously the debt continues to increase or potentially continues to increase, or at least is being maybe reduced at a modest level. But of course, the one thing that most businesses want is certainty. And the key thing I'd say at the moment with the way the market is, businesses don't have any. In terms of trade suppliers, trade suppliers at the moment are becoming quite conscious of the stresses and strains within their customer base. They're also recognising the fact that cash is required to run their business. So a number of the clients we're working with are tightening up in terms of their policy, in terms of cash collections. They're becoming highly conscious of potential failures within their customer base. They're looking quite closely at their ability to protect their positions, whether that be through their retention of title clauses, review of their trading terms, the performance of their clients, their margins and how they are recouping value for what they're supplying. And that is something which is becoming more and more noticeable. It's anticipated that with the changes in the temporary measures, with trade creditors becoming more active, shall we say, in terms of reviewing where they are with their clients, that their level of acceptance of late payment will reduce, and that may actually end up with some precipitative action being taken from time to time. Obviously, there was a recent failure of Misguided, which has now been sold. There were many organisations within there that were owed substantial sums, and they are now looking at significant issues both within their businesses, but also how they trade going forward. And I think that's become a key bellwether for other parties who are supplying into the segment, and where there is an over-reliance in particular on one customer. Finally, in terms of landlords, As I've mentioned, many had reached accommodations during the pandemic with their clients, and in particular moving to from contractual base rent to things like a reduced base rent and a turnover provision. There is obviously a legally binding arbitration process to deal with the COVID liabilities, but we're now starting to see landlords moving back to the approaches they were taking pre-pandemic. That the COVID period has elapsed as far as many are concerned. They are looking to remove the issues that have, I suppose, plagued their portfolios over the last couple of years, and step by step are moving back to trying to get back to the contractual rent provisions that were there historically. Now, admittedly, there are some sites which are performing less well, where they are actively pursuing or agreeing to deal with their clients sensitively. In other sites, I have to say, we're seeing that some of the negotiations are actually producing rents that are beyond the levels that would have been prevalent in 2018-19, because those particular sites are massively interesting to different parties. So we're seeing a split within the, I suppose, the quality of their portfolios and their sites. We're also seeing that roll through into the businesses where they're performing or underperforming within certain areas. Overall, the one thing which is becoming quite clear is that all the key stakeholders are being supportive to some degree. But of course, the question is, how long will that support last? And with the unraveling of COVID itself, one would expect or anticipate that that will then unravel in terms of their approaches over the course of the coming months and maybe quarters, which I think will create an interesting dynamic. So in terms of the future outlook, what are the key trends to watch out for? I mean, during the COVID period, obviously, there's been a good number of businesses that have been propped up as a result of government intervention. Some of those businesses have, unfortunately, already recognised that they are not in a position where they can move forward. So certainly in the first quarter and running up to the last month or two, we've seen a number of owner-managed businesses which have ended up going into liquidation administration. Partly as a result of the fact that the business just hasn't come back to them. We are seeing a number of success stories, which is always positive. And of course, throughout the COVID period, there were industry segments and areas which performed better than others. We're certainly anticipating that there is going to be a need amongst businesses to review their business performance and their business models, so they can actually make sure that they are capable of adapting and flexing to what is now a new normal, and the business environment, which has been significantly changed over the course of the last couple of years and is changing currently. And that will actually lead to an increased need to restructure the business. And I think one of the key elements at the moment, as per COVID, the impacts which are beginning to come through, they are sector agnostic. There is no one particular sector which is not affected by them. I mean, at the moment, in the last 6 weeks, I've been talking to construction businesses who are dealing with contracts that were fixed price contracts, agreed 3-4 years ago. They're having to absorb cost increases, labour issues in terms of the increase of skilled trades costs, supply issues, disputes with the actual contracts themselves and completion dates. Some of this is an overhang of the pandemic, but also some of it is actually being brought to the fore by the increased issues that are currently prevalent. Events customers and hospitality, their market has changed materially. The desire of people to book things 6 months in advance and pay a 50% deposit has disappeared. They're unwilling to pay deposits at that level. They're booking later than they were traditionally. And of course, the other thing is that passing on the additional costs is proving quite difficult. In the recruitment sector, we're seeing pressure on rates. We're seeing difficulty with businesses actually filling roles. We're also seeing that they've got increased fixed costs within their businesses that have to be absorbed. In the education sector, a couple of parties I've dealt with recently, they are partly reliant on fee-paying international students. The international student base hasn't come back. These are all individual elements, but they all link back to some degree, and are generating varying levels of stress and in some cases distress. The expectation to some degree is that at the moment these are beginning to I suppose rear their head. They're beginning to impact businesses, but their real impact is probably going to roll through as we come through the coming months, certainly out into the final quarter of the year. September to December, the Christmas period is crucial for lots of businesses. The October-November period, we're seeing consumer confidence and consumer spending becoming, let's say, more selective. So there's been probably a notable reduction in larger tickets, consumer items, whether it be electronics, whether it be cars, whether it be furniture, and that's going to roll through and create other issues elsewhere. The varying levels of stress and distress, to some degree, the businesses have and are able to adapt or can adapt. The question is, are they able to actually adapt quickly enough? The advice that we're probably most literally giving to anybody is that where any directors or any businesses are worried about their business, is to seek advice at the earliest opportunity, to start actually planning, having contingency measures and taking action now. It's quite difficult and quite often a strain for businesses to recognise or admit to themselves that their business is facing issues, or potentially struggling. But ultimately, the earlier they have those conversations, with their trusted advisors, their accountants, and their key stakeholders, then quite often the more options that are available to them, and the far better the outcome, than if they'd waited and allowed the problem to spiral. So the future outlook at the moment is, I think, also going to be challenging. There's certainly going to be testing times ahead. Whilst some of these issues may abate over the course of time, to use the word that Boris did yesterday, they still have to be absorbed at this moment. They're not going to disappear quickly. They're going to be with us for some time to come. And the question is, how are they going to stay with us in the new normal? Are these here in the short, medium, or long term? I certainly believe they're here in the short to medium term. Longer term, once people have adapted, it becomes the norm. But at this moment in time, these things are going to have to be dealt with. And I think at that particular point, if there are any questions, then I'd be more than happy to take them.
Thank you very much, Brian. That was very comprehensive. And indeed, I think we have had a few questions in, but I think you seem to have covered most of them. So I'm just going to come back to a couple of the questions that have been asked, though. So James has asked, so you have just covered off some of the sort of the specifics that you're seeing in the market and amongst sort of the specific businesses that you are advising currently. But James has asked, what are the key themes that you were seeing amongst the businesses that you are advising? So, and I think that where he's going with that is, kind of are there sort of specific, the COVID loans, the bounce back and CBILS loans and things like that. Are there any sort of key attributes or sort of commonalities amongst those businesses?
Well, certainly a good proportion of them have taken advantage of the government support, whether it be by bounce back loans, CBILS loans, all the coronavirus job retention scheme. Another consistent seems to be the fact that there is a degree of HMRC liability that sits in this. There are tax debts that have maybe been not addressed as appropriately as they should have been. The bigger issues, I think, to some degree, is that they're recognising that in absorbing the, I suppose, the cost impacts that are beginning to impact their business, they're questioning their ability to I suppose, cover everything and achieve everything. But ultimately, that there are certainly, almost certainly, the vast majority of them have taken advantage of some degree of government measures to actually navigate COVID.
Very good, thank you. We had quite a few questions around the various appetites for taking enforcement action or slightly more robust action from various stakeholders. I mean, namely lenders and HMRC, but I think you've generally covered that off already. So just one final question from me then in that case, Brian, not wishing to put you too much on the spot. So today we have generally a mixed audience of accountants and lawyers who've joined us. So your top 3 tips for those advisors on the call this morning in terms of looking out for their client interests in the current climate?
Well, I think the first one is, if your client isn't asking themselves these questions at this point in time, the real question has to be why. I think it's quite accepted that these things are there. They are beginning to bite. Yes, there are businesses that are performing exceptionally well, but these are things that are, I suppose, increasing the base fixed overhead or fixed costs of the business. So these aren't things that they can necessarily deal with without passing them on. And then it becomes a matter of, are they able to pass them on? I have to say the second one is, volatility quite often generates opportunity. It's those that adapt and let's say adapt quickly who will be in the best position to take advantage of the opportunities that present themselves. And I think the third piece to some degree is if they are looking to address these issues, the earlier that they can seek advice, or the earlier that these discussions are being had, the quicker and the better and the more options there are available, or contingencies that can be put in place. Because the one thing we don't know at the moment, I mean, if you take, for example, early 2020, we weren't expecting to be in a period of hiatus for 2 years. Coming into 2022, yes, there were some signs of certain bits, but we certainly didn't expect as many of the impacts and obviously the political situation in Ukraine with relation to the war to materialise, and to have such significant impacts on things like fuel, energy, etc. There is going to be let's say a tough period over the next 3, 6, 9, 12, 18 months. The sooner that people start to actually look at the resilience of their business, the capability of their business to adapt, the measures that they can take to make sure that their business is still moving forward at a sensible rate. These are all conversations that I would recommend people have certainly as early as possible.
Perfect, very sound advice there. Thank you so much for joining us today, Brian. That's been very helpful. I'm going to move on to our second speaker. I'm conscious of the time and that we are a little bit behind schedule this morning. So I'm delighted to be able to welcome back my colleague, Nigel Langrick. Nigel's from leading R&D tax credit specialist, randd UK, who are part of the K3 Capital Group. Nigel is a senior manager within the business and has got 10 years experience in the industry. He works as part of a team that successfully claims R&D tax credits for SMEs. Just recently, his team has secured over 170 million in tax credits for their clients, submitting in excess of 3,500 claims with a 100% success rate. Nigel, well, delighted that you can join us again. Welcome back, and over to you.
Thank you very much, Marie, and good morning to everyone who's joined us today. So my update really is going to cover 2 main areas. HMRC update, which is always kind of a hot topic within R&D, is a changing sort of landscape and there's many changes afoot, and then the kind of changes within the actual scheme as it is now, changes that have just happened and changes that are going to come into place in the coming years. So first of all, we'll touch on the HMRC update, and as many of you may be aware, if you deal with R&D for your clients, there are increasing numbers of inquiries being opened as a result of R&D claims. I think this is going to be the normal going forward. HMRC are just looking to police the scheme much better than they have done in the past. Now, clients may find this worrying. However, there's no need to be worried if they are submitting claims that meet the requirements of the scheme and they have the support and evidence to back those claims up. HMRC are putting more resource into the team, so there is more scrutiny there. But as long as you can provide the evidence, as long as the claims are made in good faith and you are looking to meet the requirements, you should be good, and your clients should be good as well with, receiving the benefit of the R&D scheme. RAND's experience recently has been that we've had some positive outcomes from our inquiries that we've had. Clients winning their inquiries completely. HMRC accepting the claim. The evidence was there and provided to HMRC, and they were happy that they met the scheme totally. We had one client who had to give a small amount back, but in the overall size of the claim, I think the claim was around £50,000. They gave around £1,800 back. The client was still happy. The benefit to them was still there. And although going into the inquiry, they were maybe slightly worried that, this would put them off doing claims in the future. Even the inspector at the end of the process sort of said to them, your business does qualify. We don't want to put you off claiming in the future. It's completely random, really, that your business has been picked, and you provide enough evidence there to make us accept the claim that had been made. I suppose the big point that we are seeing asked of us in the recent weeks and months from a lot of our accounting partners is the worries that HMRC are pausing the scheme. Now, I think this has come from sort of an email that's been circulated to agents from HMRC themselves, which I've actually printed off so I can read from it to you, where they said, we previously notified agents that we paused some research and development tax credit claims payments while we investigate some irregular claims, which means delays to our usual processing times are ongoing. So I think the pertinent words there are some of the claims, and some irregular claims are what are being investigated. Now, I think we know, and many people on the call will know, that in the past there has definitely been claims put through as R&D claims that maybe didn't have the support and evidence, or by companies that didn't qualify. I think it's really HMRC just looking at those claims in more detail, putting those on hold so they can put a bit more resource into investigating them before moving forward on them. But we at RAND are seeing that many of our claims are still being paid out. So it's not that the scheme as a whole is being paused, it's just that HMRC are putting a lot more time and effort into picking out these claims that previously have found their way through to prevent the money that's being put back into the economy going to companies that maybe aren't qualifying or aren't being innovative in a way that the scheme requires. And then we did have a pre-webinar question, which I would also like to cover off because it kind of links into these HMRC updates. And the delegate had asked, interested to hear what the view is on the likelihood of a revised HMRC approach to R&D vis-a-vis small businesses, say sub 2 to 3 million turnover, and larger SMEs. Are they looking to effectively stop small businesses' access to R&D claims? Now, I'm kind of making the assumption here that this is probably as a result of some of Rishi Sunak's recent comments, where he had said that they were going to push the scheme to larger businesses and looking to increase the RDEC scheme. Now, although that may be what he's intending to do because he feels that the RDEC scheme maybe isn't getting the reach that it should have across those businesses, we don't see it as being a detriment to SMEs and the smaller companies. In fact, a lot of the most innovative companies in the country are going to be SMEs at the very start. They're going to be claiming under the SME scheme. They may be doing a lot of innovation and having very small turnover to start with. And they may end up being one of these larger companies down the line. But I don't think, from all the comments and all the kind of conversations that we have, that HMRC are going to want to close off claims to those smaller companies. They're just wanting to maybe provide more of the R&D pot, as it were, to some of the larger companies that maybe aren't taking advantage of the scheme as they should be doing. And the government continues to say that they're looking to fund innovation. So one way of that is to push it to more big companies because they have the ability to innovate more quickly. but they're not going to close off some of these smaller companies from getting the benefit, so they can then pump the money that they're getting from the R&D claims back into their further development. I think what we'll move on to now is some recent changes that we've seen. So previously, when we've spoken on some of these webinars, we've mentioned the PAYE cap. That is now effectively in effect. It was for periods commencing 1st of April 21, as you'll see there. So realistically, it's your March 22 year ends onwards. Obviously, there'll be some shorter periods in that as well that'll be caught in it, but it's for those 12-month periods. So we're now beyond that, and we're going to see this come into effect for some of the claims going forward. This is really going to affect the companies that have few employees. So they're the startup companies, maybe owner-managed businesses where you've got a couple of directors paying themselves a small salary, or just teams with very small in-house teams who are then using a lot of subcontractors. Because the cap is, as it says there, 3 times your PAYE bill plus £20,000. So if you've got maybe a software development company who is, 2 or 3 people in-house, got a very small PAYE bill, but using 20, 30 other developers who are working for themselves and subcontracting in, then, suddenly where they maybe had a fairly sizable claim for the size of the company in the past, they're now going to see that claim reduced quite substantially. So these clients are probably going to want to look at making decisions. Do they continue as it were and maybe lose out on the size of the R&D claim? That might be the best for them. Or they may want to start bringing some of these subcontractors in-house, increasing their internal payroll, but also then, not closing off the money that they're going to get through making the R&D claim. And then the next bit we want to talk about is the future changes. So as it stands, these are still yet to come into place, and the plan is that they will still come into place in April 2023. The first one being the inclusion of data and cloud computing costs. Now, we know that this is, and we've seen it with a lot of our clients, this is a big cost to some of our clients and they've always felt that it's been a bit amiss of the HMRC maybe to not include it in the past. If you're producing new software, you may have to buy a large amount of data so you can test that software, or you maybe not wanting to store everything on site, you don't want the server costs, you don't have the room or anything like that, so you're using cloud services to sort of support the back end of the development. So they're bringing those into play, which will be a big change for a lot of claims, I'm sure. It's been something that I know a lot of the R&D agents around the country and a lot of clients in these sectors have been calling out for a number of years. And the second one is the refocusing of relief towards the UK-based innovation. So this is where we have companies who are maybe using cheaper subcontractors overseas. A lot of it is going to be, again, in the sort of software space where, you've got a UK-based company and they're maybe going and taking on a development team in, say, India or Eastern Europe, where the cost is going to be cheaper to them. What they're looking to do here now is, that's a lot of money going out of the UK economy, whereas the UK companies were still able to claim the relief for the R&D on that. They wanted to bring that back into the UK. So these companies are going to have to look at, do they continue as it were and maybe miss out on the claim, or do they start to, weight it towards the UK a little bit more? They maybe won't bring all of their development back into the UK, but they might just want to bring, a proportion of that in so that they are, having the costs in the UK and are still able to make a claim on those costs. So I think that's everything from me. Pretty brief update today. If you've got any questions, I'm happy to take them now.
Thank you very much, Nigel. That's very helpful. I do have a couple of questions for you. So first one reads, what have your experiences been with timeframes for HMRC to process payments? I have a number of clients who have been waiting much longer than expected to receive the tax credit applied for. Yeah,
so we have seen the same. It's very frustrating for us, very frustrating for our clients. I think a lot of it kind of depends on the complexity of the claim. Claims that seem to be taking longer are those that have carryback of losses, especially with the 3-year carryback now being in place. That seems to be taking much longer for HMRC to process, probably just going through more checks their end. But equally, we occasionally see the odd claim that's been paid out within sort of 3 or 4 weeks, which historically has kind of been HMRC's time window that they've given out to us. as we touched on earlier, they've said they've paused some of these claims and that has had a knock-on effect. So as expected, claims are taking longer to process. I think HMRC have a large backlog of claims anyway. They are continuing to put more and more people into the team, but I think it's just to catch up from HMRC. My advice really would be, keep pushing HMRC on the phone. You can put referrals in kind of every 3 weeks. After so many of those, you can make a complaint. Sometimes that works, sometimes it doesn't. We've seen that work and kind of kick HMRC into gear for some of the clients that have been waiting much longer than expected. Sometimes we've seen that kind of, you've gone through that process and it's not really put it on any further. In those cases, sometimes we've spoken to our clients and they've actually wanted to talk to HMRC themselves. That has actually been helpful in a number of cases, because then you've got the client, the owner of the business, talking to HMRC and saying, okay, it maybe gives HMRC that bit more urgency. It all depends on who you get on the call, really, and how they manage the call for you, how they, make the decisions on the back of that. But it's just something that at the minute we're just having to sort of live with, and, hopefully it eases as time goes on and as resources put into the teams more.
Perfect. Thank you very much for that. And finally, another quite detailed question here, which reads, my worry is that too many of my clients that I believe don't qualify are being approached and persuaded to make R&D claims due to the potential reward. Do you believe all of the changes at HMRC will start to prevent some of these claims that have no weight behind them?
I think eventually they will. I think at the moment there's obviously still going to be the chance that you can put a claim into HMRC and it has very brief checks and sort of gets through the net, as it were. But eventually what they're doing, the more checks is going to catch more of these claims out. There's going to be more that are sort of thrown out or inquiries opened on the back of them. So I think yes, but I don't know how long it's going to take for those to happen. I think if you're worried about some of your clients maybe being approached that you don't qualify, it might be worth you just reviewing your client list as it is now and seeing if you can identify ones that do qualify and sort of talking to them ahead of time, and being prepared for the ones that maybe don't, just sort of having that conversation early on. One thing that I think is coming into place sometime next year is that on the tax return itself, the actual agent who has helped produce the R&D claim is going to have to be named. So that, in effect, may prevent some of the companies that are maybe thinking there's a quick buck to be made by making claims for companies that don't qualify. It might deter some of those claims being made. So that is something that could be a positive, but again, it's not coming into place yet. It's sometime next year.
Okay, that's very helpful. Thank you very much. Right, so that brings to an end the first part of today's session. If anybody has any questions that they'd like to take offline with Brian or Nigel, contact details have been very diligently put up on the screen by the team running the session in the background. Thank you very much for that. So moving on to the second part of our session, I am delighted to be able to welcome back our regular guest speaker, Shane Lukas, owner and managing director of AVN. AVN offer coaching and training to accountants and other professionals, assisting them to transform their practices into rewarding and profitable businesses. In today's session, Shane will be broadly covering practice success in 7 steps, 4 key actions to set you apart from your competitors, making the business work for you rather than the other way around, and finally, how to reduce your hours whilst earning more. So I'm definitely going to stay on for this one. In addition to the many accountants dialed in today, we do know that there are some lawyers in. This has absolute relevance for you as well. And hopefully you'll find Shane's session rewarding today. Shane, thank you very much again for joining us, and over to you.
Thank you very much, Marie, and welcome everybody. Marie or Helen, I actually don't know how to enable the chat box, so if you would kindly do that on my behalf, that would be very much appreciated. I just want to say, I'm just looking through the massive list of attendees on here today, so wow, what a great turnout, but actually just flicking through the names, lots of names I recognise, so if you don't mind, I'd just like to say a quick hello to James. I'm just looking at the chat list over there, the attendee list. James and Keith and John and Patrick and Peter and Nadeem, I know that I've worked with you or I've spoken with you at the very least in the past, so please do give us a hello in the chat box if that's now been enabled. That would be fantastic, certainly for those of you who I've worked with in the past, and those of you who I haven't. I just want to say welcome and thanks for joining me. Hi there, Nadeem. Okay, wonderful. So today's session, let me just switch on my slides, is, hi there, thanks for all those. They're coming in just for hosts and panelists, most of them, but not to worry. Good stuff. Right then, let me just, I've got my slides loaded. I just want to make sure that they are running now. Wonderful, so you should be able to see them behind me. Today's session is about award-winning ways to practice success. And I wanted to share this with you specifically. And by the way, I know that Marie and Helen both told me that there's a mixture of accountants and lawyers on here. Not a problem, actually. Everything I'm talking about really applies to anybody in professional services. So please don't feel, oh, do you know, Shane works with accountants, this won't apply to me. It absolutely will. Every single bit of it. So today's title is Award-Winning Ways to Practice Success. And in the next 44 minutes, I suppose I've got now, I'm going to share with you the 7 different award categories and why they're important. I'm going to share with you the common threads that we take from those that we see on a regular basis. It's not just the one-offs, but actually, what are all these really amazing firms doing consistently that's getting them consistently great results? And just to say that most of these come from the 1 to 3 partner firms. We have had 9 partner, 11 partner firms win these as well, of course, in the past, but the majority of them are 1 to 3 partner firms. In other words, don't feel, well, these are probably just really, really large firms and this won't apply to me. Everything that I'm talking about absolutely will. So let's begin. Now, I'll talk about the title of each category of these awards as we get to it, but really the structure is I'm going to break these down. We've structured these in a specific order deliberately because really when you're growing a business, whether you've been in it for 20 years or whether you're starting from scratch, if you want to transform it into a business that really, really works well for you, then the order that I'm running through this stuff is probably the best order to approach it in. Okay, hopefully you got your pens and paper ready. It's going to be a fairly fast-paced presentation because I've got a lot that I really want to cover and convey with you. Thanks for all those hellos in the chat box as well, very much appreciated. Okay, so this was just an image of one of our previous award-winning, well, all of the people who won awards standing on stage. Now the first award is Practice Clarity Award. This is really about knowing exactly what you want to achieve from that business. A mistake that I see so many people in professional services in general, yet alone accountants, make is that they don't really have a clear plan on what they want to achieve going forward for that business. So they end up being stuck on the daily treadmill of just doing the same thing day after day without having something that they're specifically aspiring towards. So this is about having those things in place. Consistently, these firms are absolutely clear about their purpose, what they want to achieve for their business, what's important to them personally. A purpose isn't something that you just come up with because it sounds good. This is something to discover from within. So they've clearly identified, discovered their purpose, and they make that clear. They set their personal goals first. Many people focus on the business goals, often at the expense of personal stuff. No, a business should work for you personally and allow you to achieve your personal aspirations. So they set their personal goals and objectives that are probably around their purpose first. What do they want to work? What do they want to earn? But what's the bigger purpose for them? Then they'll create a business vision that's going to enable them to build a business that gives them the lifestyle, the personal goals that they want, and then they'll set those goals around that. Really important, and I believe that order being really important as well. From a vision point of view, when I'm reading these entries, and by the way, we get 20, 30, 40, 50 entries per category regularly. When I'm reading these, what I found in common is that they were very, very clear about their vision. It's almost like they'd stepped into a time machine and gone forward 3, 5, 10 years, and they're describing in absolute detail what that business is operating like to really, nth degree, if you like. They're very, very clear what it sounds like, what it looks like, what it's operating like. So I encourage you to do the same. Really think about what's your business doing? What would you like it to be doing in 3 years, 5 years' time? Because when you do that, it's much easier to reverse engineer that back. It's very difficult to sort of see a way forward. But if you actually jump time-wise and say, right, this is what I want it to look like if I could wave a magic wand, and then you can reverse engineer that back. Okay, this is what it's going to look like in 3 years' time, this is what it's going to look like in 2.5, 2, etc. They therefore have a absolute crystal clear strategy on exactly what they need to do from day 1, day 2, day 3, week 1, week 2, etc. They track their progress, they measure their progress, they have one-page plans with key performance measures on there so that they are measuring that, and they have regular meetings to ensure that they're looking at these numbers and then asking themselves, what action do we need to take to make those numbers better? They remove the restraints. It's so easy to allow stuff to get in the way of us making progress. And there are many different types of restraints as well. Quite often the ones in our head are our biggest restraints, aren't they? Our self-limiting beliefs, believing what's possible, believing that we're capable, imposter syndrome, all of those different things can get in the way of us making progress. So, you know, they do what they can to eradicate that. I'm not saying you can click your fingers, but they do what they can to step out their comfort zone and just make stuff happen. Some of these applicants were actually part of a franchise. Now, I'm not saying there's anything wrong with a franchise, but some of these franchises were really having a negative impact on them. So if that's the case, then they were getting out of those franchises. Some were separating from business partners where they had differing values, differing aspirations, etc. Clients, sometimes the clients that can be unprofitable, they can be very time consuming, they can prevent you from achieving what you really want. They've said goodbye to many of their clients. Likewise with their team. Sometimes you might have people in your team that are just holding you back, they're bringing the morale down, we call them terrorists. You know, there's no place for them in your organisation. So it can be very difficult, but the best thing to do is just part ways with those people. And even life partners. Some of these people were saying, do you know what, I was just continually being pulled down by my husband, my wife, whatever, and just being made to feel that I couldn't achieve this stuff. So, you know, the best thing was actually that we parted company. So they removed the restraints because actually they have a purpose that they want to achieve. They connect. People we work with certainly connect with practice growth experts who are coaches. They connect with other AVN members. The people that we're not working with are still connecting with a business coach because it's good to have that external influence challenging you, challenging the way that you're thinking. And of course with other accountants, sharing knowledge, sharing ideas, realizing that you're not alone, really, really important. They're very specific. They'll define exactly what their perfect client looks like, and then they will specifically target that particular type of client. They'll have a criteria for where they'll maybe make an exception and where they won't, and they'll refer the people who aren't right for them onto another accountant. They regularly, not just as a one-off exercise, but regularly apply the 80-20 principle to their client base, because 80% of your income comes from generally 20% of your client base. So what they'll do is regularly review this, and they will just out the lowest income, lowest profitable clients on a fairly regular basis. In addition to that, they will grade their clients, because quite often we have a mixed bag of clients, don't we? So by grading them, you can identify who are your A clients, your Bs, your Cs, and your Ds. And then they will work with those clients as well to try and upgrade them, have conversations with them, sell more products to them, make them more profitable, get them on board. There's always inevitably going to be a number of clients that just won't come on board, or won't buy more products, won't become more profitable, or are just abusing the system, abusing the team. So again, they're regularly refining their client base to ensure that they're just working with the best people and they focus on attracting more of these guys. Rather than pricing competitively, pricing by the hour, or putting a fixed pricing based on how many hours it might take, based on some arbitrary number, they price based on a value pricing mechanism, and they get consistently 50% at least higher fees, even on the compliance stuff alone, yet alone the added value type of work, than other accountants that don't price in that way. And they're having regular conversations with those clients and cross-selling additional added value services, and their clients are incredibly happy about that. They pay them a premium and they're paying for additional services, and they are happy about it, and it allows the business owner or owners to work fewer hours with fewer clients who are paying a premium as a result of that. They have, as I mentioned already, they have regular conversations with their clients, spotting opportunities where they can be helped in more ways. In other words, they're maximising on client potential, which is a win-win because it's saving the client time as well or helping them in many more ways. They take control of their practice. Many accountants say to me, and they'll confess, they'll say, I'm a control freak, I just can't let go. I have to double check everything that my team do before it goes out to the clients. And it's very natural for a business owner to be a control freak, isn't it? But actually they take control by letting go of doing that, not losing control, but actually putting different controls in place, by putting systems in place and ensuring that high standards are met consistently, but they don't have to micromanage that process. They assign quality time on a weekly basis to their number one client, which is of course their own accountancy business. So few people actually allocate specific time to work on their business. So they make sure that they have in their diary allocated time every single week, no interruptions, no client meetings, no phone calls, no emails. I will just work on my business and grow it. They continually invest in their education. I don't just mean the CPD in terms of accounting and tax and legislation and all of those factors, but also their softer skills, their sales skills, their relationship building skills, their emotional intelligence, their business advisory, all of those different types of things. They are regularly investing in their own education on. And they understand that, they don't allow ego to get in their way. They will get additional help in different ways, whether it's coaching, whether it's outsourcing, but rather than reinventing the wheel or just functioning with the old-fashioned type of ways or trying to figure this stuff out as they go, they'll get help. So all of those things together kind of culminate into that first award, which we call clarity. And clarity is something that we certainly help accountants get in place as well, because it means that they've got a plan for how they're going to achieve success in their business. So the next award is called Practice Differentiation. And this is really about how you are positioned in the marketplace. If prospective clients and even clients see you as just the same as all of those other accountants out there, then they're not going to treat you any differently. It's very difficult then to sell added value services to them or to value price your services. So by differentiating differently from the competition, then that allows you to set yourself apart, price very differently and offer different services. Now, I'm sure many of us are familiar with this logo. It is, of course, Disney. And when we see this logo, we don't just make that kind of connection to say, oh yeah, that's Disney. It often elicits an emotional response as well, doesn't it? We have an emotional association with Disney. And for me, that's the power of a brand. Many people out there will say, oh, let me outsource brand building to somebody else so they can build my brand on my behalf. Really, that's a waste of money, because a true brand is built and it is a consequence, an outcome of getting all of the right mechanisms in place, your vision, your values, your reputation, and all of those other important factors really culminate into your brand and the associations that people have on what you're about. And that's what they focus on. They make sure they get all of this stuff right, and then the brand is the consequence, the happy outcome of that. In terms of differentiation even, I see lots of accountants' websites and they all pretty much the same thing. In fact, I challenge you, and I know I keep saying accountants and there are lawyers on here, the same applies to you guys. I challenge you to take your name off of your website and then compare what it says on there with maybe, Googling other like-minded businesses around you, other accountants, other lawyers, and just see how different is your website. Because when I look at accountants' websites, they all have similar buzzwords. They may have different colours, different graphics, different images, but they all say the same kinds of things. We're accountants and business advisors. We're different. We're not like other accountants. We're proactive. We're forward thinking. They all say those things, but they don't demonstrate how they're different. They just say them. It lacks substance. And then they all go on to say, we do accounts, we do bookkeeping, we do payroll, etc. And so from a business owner's point of view, well, they all say the same thing, therefore price can be the only deciding factor, can't it? Differentiate yourself sufficiently and you're going to connect with people in a different way. One great way of differentiating is 2,500 years ago, Aristotle said that, really we should be communicating on 3 different levels, and all of the research right into the latest books that you'll find all say exactly the same thing, that we should communicate on these 3 levels. Ethos is about establishing credibility. Now, accountants are very good at that. They will put their qualifications on their website, things like testimonials, reputation, all of those things will really help with that. Logic, accountants are still good at this as well, the logic, the reasoning, the facts and figures. There are other elements that they could focus on for this, but they tend to get that right. Where most accountants that I see really let themselves down on is this side of it, putting the emotional connection onto their website. And I'm not just talking website here, by the way, I'm talking about all communication, whether it's emails and communications at BNI events or presentations that you might run, whatever. It's the emotional connection. What are you passionate about? Is that on your website? What are your values? Are you, in addition to just getting your one-liner testimonials, are you capturing full case studies, the emotional journey that your clients have gone through where you've helped them improve, etc.? That's really important and yet often lacking, and it's a great differentiator. So again, just a few examples. Many of our customers certainly have very different websites, and certainly the people who applied for those awards, very different websites from the norm that we see out there. And they're really resonating on an emotional level with prospective clients and of course their existing clients. They also create a lot of collateral. They'll write books which really position them as an expert. They'll create resources. Whether, obviously a few years ago, GDPR, 71 ways to pay less tax, creating professionally structured brochures as well, not just a pretty brochure with images in it, but actually professionally structured in a certain way that really helps. So they've got all of these additional collateral. They happily put their values on their website so that they're attracting the right kind of people and detracting the wrong ones. Again, values. They're also applying regularly for awards, not just with us, of course, but with other people, because awards are a great way of setting you apart. It's not you saying, look how good we are. It's an external body that's recognizing how great you are and giving you that accreditation. So actually, if you're not applying for awards, then it's a great opportunity for you to do so. You really ought to be doing that, in my opinion. This is another example, an accountant who features in the book called the Business Owner's Guide to the UK's Best Accountants. It really differentiates people. This is another example. Lawrence & Co, they have a website widget that really just builds this tree based on the most popular words that were used in the testimonials that they've received from their customers. So somebody looking at it, they might see a word that resonates with them, they'll click on it, and then it filters all of those testimonials to just the ones that contain that word. They have their missions, their purpose clear on their website, and in many cases that acts as a strapline. Show me the past, we'll show you the future. We're about making lives better. We're about helping women in business. And all of those different straplines that are incredibly important to them. They get social proof as well. As I say, it's not about you saying how good you are, it's about other people. So asking your clients to give you reviews. Here's an example. I don't know how clear it is from your point of view, but I just by way of preparation, I just Googled plumbers in my area. And the first two there, there's no reviews on them whatsoever. The one that caught my eye is the one with reviews. Now, actually, it's only got 3 reviews, but still, it was the one that had got reviews on 5 stars. Are you consistently asking your clients to give you reviews? Are you collecting case studies and testimonials and putting them on your website from your clients? Again, that was another example of those testimonials. I thought Yellow Pages and therefore Yell.com had pretty much died a death, but one of our members invited her clients to give her reviews on Yell.com, and it was the only accountant in her area that had got reviews on Yell.com, which actually pushed her to the top of the page in Yell, but also on Google searches, and she started getting loads of inquiries just by doing that one little exercise. So you've got Yell.com, you've got Google reviews, lots of options there. And of course, asking for LinkedIn recommendations, because people will check you out on LinkedIn. If they can see you've got recommendations, that's incredibly powerful. Many of these have the mindset that, the accountant down the road isn't a competitor, because they have different values, they have a different ideal type of client, they work in a very different way. So rather than seeing them as competition, they'll see them as complementary, and they'll create relationships with them. So they'll say, look, if one of our clients refers someone to us that's not right to us, can I refer them on to you? And what happens is that a reciprocal type of relationship comes from that. So they're actually good friends with their local accountants rather than seeing them as competitors. They position themselves as professional. I mentioned earlier that they'll define their ideal client, but they'll be very, very specific about who they take on. There has to be a values alignment. They'll be very specific about how we work here, and if you don't want to work with me in this way, then, I will introduce you to another accountant very happily. They're not desperate to work with everybody that comes their way. They'll come up with specific agreements rather than, coming away from a meeting where the client thinks that they're going to get a certain service, which is like an empire of service, and you thinking, well, they've just gone for the rock bottom. It's crystal clear on what isn't included, and it's kind of an agreement in place. They'll put penalties in place if somebody's bringing their information in late, rather than tax return season being a nightmare. They set specific deadlines when stuff has to be in, and if it's not in time, they'll charge them a penalty. If it's not in by the next stage, then they'll sack them as a client. And they'll be very specific. Look, I'm a professional here. I'm not available out of hours. You cannot contact me out of hours. I have a life to live outside of that time as well. They're very specific about that. They position themselves as an expert. They really seek to understand their clients, their situation, their sector. What mistakes are often made in that particular sector by the people that are in there? What are the typical problems that they face? They seek to understand every client's goals and aspirations. They take a look at the possibilities within that business by running a business potential exercise with them compared to the current situation. So lots of different ways there that they are really differentiating themselves from other accountants. And that all comes into positioning, where when you're different, you attract better quality people rather than the cheap ones that are just looking for the cheapest quote. The next one then is Business Advisory Award. And this is really about delivering much more value to your clients, but also, many people say to me, oh, it's very difficult. I talk to prospective clients and clients about advisory, but they're not really that interested in them. And a lot of that is because of the positioning that we've just talked about, but a lot of it is also about the way that they position advisory and how they sell their services. Quite often they give their clients too many choices. Choices is paralysis. They might say, oh, we do accounts, would you like that? We do bookkeeping, would you like that? We do payroll, would you like that? We do tax planning, would you like that? It starts to feel very salesy after a while. And then they might get onto the likes of business advisor, and by this point, or way before this point, the client's going, let's just stick with the basics. The really switched on firms, the ones that are winning these awards, they don't sell all the individual pieces of the jigsaw. They create the big picture. They bundle all of these services into a lesser or greater extent, and they package that up, and then they have 3 levels of service, so that they've got, your absolute everything's involved here, and maybe to a lesser extent you've got stuff here. But the ones that are incredibly passionate about business advisory services still include that in their lower service. It's bundled in, but it's priced for, and it's all wrapped up together. And they'll go through a top-down pricing approach. It's value priced, but giving 3 choices is incredibly important. Rather than all those individual choices, you're limiting it to 3. Research shows that 3 choices is the best way forward. They don't compete on price because they understand that cheap is never great and great is never cheap. They deliver high value, but in low effort ways. They look to wow their clients on a regular basis, and they'll tap into and embrace different software tools that make that easier, providing great reports, having better quality conversations based on those reports. High value in a low effort way means it's much more profitable. And they'll enhance the value perception. They'll map out the customer journey and look, how can we increase the value perception every step of the way? So they'll analyze all of these factors. They'll do a needs analysis with every existing client as well as new client on an annual basis. What are your personal goals? What are your business goals? What are your current challenges, etc.? They'll work through all of those things with them. Every single visit is a wow. Most people might send a map and directions. These might do things like they'll reserve a parking space if they have their own car park. Here's an example. They make sure that that first impression when somebody enters the building is a wow factor. I remember visiting one of these firms, and the first thing I saw the moment I walked through the door was a big massive screen saying, "Welcome Shane Lukas, it's a privilege that you're here." And then I walked up to the reception, and the lady that was sitting at the reception at the time said, "It's Shane Lukas, isn't it? Last time you were here you had a coffee, it was black. Would you like that again, or would you like to see our drinks menu?" So they remembered me. That makes me feel special. Whilst I was sat there waiting, that presentation was going through, "Shane, did you know that we could help you in this way, this way, this way, etc." So it was a real wow. During meetings, they make sure that a meeting agenda is sent out in advance of that meeting so that people can see what's going to be discussed. They're invited to contribute to that agenda, and then during that meeting, there's a crystal clear agenda that they go through. Consistently, one of the items is asking for a referral from their client, and they give an advance notice so they can be prepared for that. And they'll go through much more meaningful conversations as well. They'll analyse what they look like compared to others in their industry so they can see their strengths and weaknesses. They'll analyse the trends to see how they've been doing in previous years, and are there some of those key numbers that are gradually deteriorating that in isolation you can't tell, but when you look at it over a period of time you can. They spot opportunities to help them better, and they go through what if analysis, asking those thought-provoking questions just to get their client to think a little bit differently. They deliver proven methodologies in terms of advisory solutions. And they also recognise that what wowed a client yesterday is today's expectation, which means they're continually refining and enhancing that entire customer journey process. So all of these things and more, of course, go into that value, that adding much more value and delivering more exciting solutions to their clients. So the next award that I'm going to talk about is what we call Customer Committed Team Award. And this really is about the business owner or business owners taking more of a step back and allowing their team to engage with their clients in many, many more ways. It's more of an entrepreneurial mindset. You know, we don't have to be the ones doing all of the work as a business owner. It's about, as I say, letting go of that control, but putting the high standards in place to ensure that everything's going to be done in your way. So they lead, they don't manage, they don't micromanage, but they inspire people. They consider themselves as part of a team rather than having this us and them type of mentality. They appreciate that their clients can be served by their team, and actually they position their team incredibly highly. In other words, they let go of their ego. They'll maybe have a quick chat with a client that they see in reception, but they say, "Okay, your client manager's here now. I'm going to hand you over to them. They're much smarter than me. They'll help you in many, many more ways than I possibly can." They're not afraid to say things like that. And they trust their team whilst they're on holiday as well. One example, one of those award winners said that I was able to take a 6-month tour of USA. He says, I had no extra work to do before I went. I had nothing, no worries, no emails, no texts or anything like that whilst I was away. And when I came back, I had no extra work to catch up on whatsoever. My team took care of everything. So focusing on developing a great team is really important to them, and creating that culture, creating a culture that has all of these factors involved. So just a few examples here. Having a great sense of achievement within the team, so people know what's expected of them and that they are achieving what's expected of them. Having personal one-page plans where they're measuring their own key performance measurements. Knowing what they're accountable for. They're celebrating wins. What do I mean by that? Well, for example, this particular business, when they achieved a company goal, they all celebrated by the whole team closing the office for a few days and going over to Disneyland Paris for a few days. And the answer phone message told the people exactly that as well. Making sure there's a culture of fairness in there. You know, there's a great environment, there's agreed working schedule, results-based, flexible, family first, those types of factors. There's a sense of camaraderie because these really motivate people towards a bigger sense of purpose, a shared vision. It's a team type of mentality. They only employ people, not just purely based on CV, which many people do, but actually also based on their mindset, their behavioural characteristics and various other important factors as well. They have the mentality of, you know, I'm going to hire slow. I don't care how long it takes until I get the right person. But if I feel that that's the wrong person, I'm going to fire them very quickly. They'll play people to their strengths and they'll surround themselves with very different capabilities to ensure that they've got a full range of behavioural styles within their team as well. They invest in their team. As I mentioned earlier, not just the technical stuff, but also the soft skills as well. They'll invest time in their team, going through career development processes with them. They'll encourage their team to, this is called the initiative ladder. I don't have time to do that justice right now, but the initiative ladder, by stepping up and using their own judgment more, judgment that fits with the way that the business needs to operate, then they can let go more and hand over to their team. And they're encouraging ideas coming from their team as well. They change the way that they work. Most accountancy businesses, whether it's a one partner or five partner, is kind of all centered around the partners, seeing the clients, having prospective client meetings, doing the work, double checking the work. Regardless of how many team members have got, they tend to be a bit of a bottleneck. The really switched on firms shift from this business operator mentality to a business owner mentality, where actually they take a step back completely from client facing and they are just allowing their client managers to look after the clients, look after prospective clients as well, taking them on board, and the role of the partner is to support the team, not the client. And that allows for scalability as well. That is a business owner type of mentality. They'll leverage their time by outsourcing more, outsourcing the telephone answering service. You don't need to do that in-house. Outsourcing the entire admin function if you want to, outsourcing tax returns and payroll and compliance accounts, outsourcing your social media or your general marketing activities, outsourcing getting meetings booked with prospective clients. And the world is endless in terms of what you can outsource. So all of these things go into gearing. The next one is really ensuring that you've got those consistently high standards in place. And this is a award for really having those systems and the technology in place that means everything is happening automatically. The aim here, by the way, is for the business owners to be making themselves redundant. Now, I appreciate that might sound scary. Why would you want to make yourself redundant? But the nature, the definition of a true business is that the business owner doesn't have to work in it. The business works for the business owner. It is generating the income for them. So to do that, they put systems in place, they have their values, they have rules in place, they set priorities so that people know what's important, and they adopt the best technologies to do that as well. That allows the business owner to spend as much time as they want touring America, enjoying the beach, or if they get hit by a bus, that their practice won't fall down around them as well. They aim to make everybody dispensable so that the business isn't reliant on any one person. One of the quotes that came from those awards was that, you know, I want to grow a business that's going to leave a legacy rather than a business that's going to be a cause of death. And for many accountants, it pretty much is a cause of death, isn't it? They put systems in place for every single part of their business, right, from leadership to people to operational to customer service to the finance function, the marketing, the whole lot is systemized. The team are involved in that process, so they buy into it, and they're helping to advance that as well, so that their customer service experiences increasing on a regular basis, as already we said. Now, it's the Wooden Disney way, it's the Bloggins and Co way, it's the Lawrence and Co way, whatever it is. But you know, I often use the example, if somebody moved from Burger King to McDonald's, they would still have to make those burgers the McDonald's way. They can't say, well, actually, I thought their way was better. And this is about you doing exactly the same. It's about your systems and your processes. They take out the bottlenecks and they ensure that they're working smarter, not harder. And from a customer service point of view, they are measuring this on a regular basis. Are their customers happy? Here's an example of one accountant that continually surveys his customers after every single meeting or interaction, and that goes on automatically to the website live. So how much accountability is there to ensure that they are wowing their customers if it automatically goes onto the website? This allows, as I say, those business owners to relax more, to not be interrupted out of hours, and for their working hours to come down. In many cases, maybe their starting point was 60, 70 hours a week, and that allows that to come down. And they're embracing technologies, putting mechanisms in place so that customers can communicate with them better, more efficiently, more effectively. Obviously interacting with the likes of payment and making sure that seamlessly goes into their accounts package. They're using CRMs that automatically email and remind clients about bringing in information. It records sensitive data for their clients, so it's just all in one place. They'll use project management tools, they'll use client portals, they'll use Zoom and video technology. Ensure everything is of course highly secure and encrypted, and they'll make sure they're making the best use of communications apps as well. So again, all of these things come into really just creating automation within the practice so it can be scaled up to as much or as little as the business owner or owners want it to be. So the last two, and these are a little bit quicker as well, is high profile practice. This is really about getting known, liked and trusted in your target market area, becoming highly sought after because you've built that know, like and trust factor. So I'm just going to show you a couple of examples here. We have to build the know, like and trust before people will be prepared to invest a significant amount of money with us. This is where, you know, value pricing comes in very differently, because you're looking to really set yourself apart from the competition. So different ways to become known, like and trusted. Obviously you can write your own blogs, but you can also guest blog on other people's websites, which means you're getting known by different audiences. You can guest podcasts, you can be a guest on many different ways so that you're getting your name out there and becoming known. Becoming liked is a little bit different. It takes us a lot longer to start to like somebody, but here's a great example. An accountant, so the lady there is the accountant, this is a client of hers, and they recorded a fairly serious video for YouTube, but actually, as often is the case with these types of videos, there's always a few outtakes, isn't there? What they did right at the very beginning of this video is they just put 10-15 seconds worth of those outtakes at the beginning. What you discover when I play this for you is that suddenly we see the human side of Georgie there, the accountant. Because it's easy to assume from a business owner's point of view, oh, you know, accountants, they're all the same, they're all grey-haired, you know, that stereotype, which we know is not true. We all have a nice human side of it. Let people see that, because they'll start to like you better. So I'm just going to play this, and if you don't smile when you're watching this, sorry, I thought I'd seen a message for me, but it's fine.
How you doing?
Hi.
Hi. That's all fine. That's all fine.
Let's go there at the camera.
Yeah. Okay. Hi, I'm here with Georgie. Oh, no, that's doing. I have to close the Slack. Hi.
A few seconds at the beginning of that video, but it really made the user, the viewer of that video, really smile and start to see the human side of Georgie. And then finally, you know, trust. Trust takes even longer to build up. So how do you build trust? Well, you start to put valuable content out there that's not with an ulterior motive of getting a sale, but it's actually just giving, and people will start to trust you more and more. So these are different ways. Of course, case studies from your clients is going to help build that trust, that social proof factor. Other things as well that they use to really raise their profile, as I mentioned earlier, they write their own books. They might deliver presentations to their clients in the flesh or on webinars. And as I say, they're putting content out there, YouTube, social media on a regular basis. They're capturing emails so they can keep building on those touch points. So on their websites, they've got different ways. Download a copy of this resource, download a copy of my book, get on my newsletter, whatever it might be. They're using those different mechanisms to capture emails, and then they can start to market to them in that way as well. And they're producing regular articles and blogs on their websites. And the result of that, by putting content out there, is that when somebody checks you out, you're the one that's going to come up. And, you know, something like this, the award-winning accountancy team at NDH, at the very top of the page is something that you want to be striving for. Now, many people, when I talk about this stuff, feel, oh, you know, I don't want to be putting myself in the spotlight there. I don't, you know, I'm not egotistical. This is not about putting yourself in the spotlight. Nor should the ulterior motive be around, you know, plugging, self-promoting. It's not about that. That will happen as a consequence, but it's not about self-promoting. It's about giving. It's about you shining the light, not on yourself, but actually on the different ways that you can help people and give them advice and strategies and ideas, etc. That's what that's all about. And to a large extent, it's about stepping outside of your comfort zone where the magic happens. And what happens as a natural consequence of that is that your comfort zone grows automatically. This is about, you know, all of these activities might take effort. They measure the results. If the results aren't coming in, then it's not working. So they measure everything to ensure that they are getting the results. And the happy outcome from that is that they're building their profile, they're getting known, liked and trusted, and highly sought after. And finally, and very quickly, the final one is Changing Lives Award. And this really is about making a difference. The people who are winning these awards, you know, Maslow's hierarchy of needs says that, you know, we can be in different places depending on our situation, but we tend to reach a point in our lives when we've got our businesses in order that we want to start to give back and help other people. So these are heavily aligned with the United Nations global goals. Different ones of those will resonate with different people. What a lot of them do is they ask their clients which resonates with you and will make a giving, an impact. And many of these use the likes of B1G1 to do that because it's easy to do. I recommend that you look at B1G1 or the United Nations global goals as well. They'll have things like this in their reception, so it's or their conference room, so it's a talking point with clients. They set giving goals. So, you know, maybe money's not a great driver for a lot of people, but actually being able to give more means that I've got to grow my practice and the profitability so I can give more back. They'll set giving goals. They'll help their team through their careers, and they're helping their clients do everything I've just talked through as well. Getting more clarity, positioning themselves better, adding much more value, leveraging their time, putting the systems in place for scalability, building their profile, and actually making more of a difference to their clients and maybe aligning with the United Nations global goals as well. So that's me. I think I've finished exactly on time. If you've got any questions, please put them in the chat box. In the meantime, I'm going to leave you with this finishing slide. I hope you found today valuable. Thank you very much for that, Caroline. Really appreciate that comment in there. Sorry it was so fast paced. I was looking at it, I knew that it would be fast paced. It's like, do I remove stuff or shall I just go really quick? And sorry, that was the decision I came up with. So thank you very much, everybody. I will make myself disappear and just make that slide the dominant one so that you can see that. And assuming that there are no questions coming in, I will thank you all. Thank you, Marie. Thank you, K3 Hub. And well done, Brian and Nigel as well. I thought you guys did amazing. Thank you, Jerry.